Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar rollercoaster ride continues as the market first of all retreated from this top side of the range around 60.75 and plummeted to a fresh low of 58.69 yesterday. It was from there the market turned around sharply and now looks back towards this level of 60.75. It is assessed that if we get a close above this level, and that is in New York, then I do anticipate that we could see a further squeeze in the market and maybe look towards a region somewhere around 64 cents because the MACD has strengthened along with the RSI, and I am a little bit cautious that the market could be caught short considering that we have rebounded, that is from 55 cents, and where we are now getting close to 61 cents. So do be on your guard and keep your stop losses according to your risk management in case we do get a close above 75 and therefore could initiate a move up to 61.5 and 62 and up to 64. The euro pushes higher overnight as the dollar drops even further. The index, which measures the greenback strength against a basket of 6 major currencies, fell beneath the level of 99.50 and posted a fresh low of 99.32. This in turn has kept the euro bulls relatively busy and now claims the highs around 110.58. Overnight, the US jobless benefit claims triggered the greenback's decline after the Labour Department reported a show of a whopping rise of 3.2 million claims last week. This is a quadruple the prior record. As the state worldwide lockdown brought the economy to a halt and unleashed a wave of layoffs. That number blew past the Great Recession peak of 665,000, that is, and the all-time mark of 695,000 in October 1982. The market is still waiting for the White House and the Congress to reach a deal on $2.2 trillion stimulus package to support the economy through the coronavirus pandemic, though voting has reportedly been held up by a drafting error in the bill that encouraged layoffs. So let's see how it all plays out. But for a technical point, we could be looking now up towards the region of 111 due to the fact is that we're getting relatively strong on the indicators. And therefore, since the break of 109 figure 30, the market has not shown any pullback yet, that is, and you can see that all the bull candles are still getting strong. In favor of its pattern, the market has plummeted even further and reaches its target of 109.25 and now has 108 figure 40 on the cards. And no doubt I do expect to see further risk if we see a break beneath there, and could look down towards the region roughly, if I just put it in, around 105. But first of all, we do need to see the break of 108 to support that call. Any advances should find resistance now around 109 figure and a half. The pound surges further overnight, and I still hold a neutral view, and purely for the fact is that the market could even stretch up towards 122.60-65 as this current pattern strengthens. Do note that the MACD is nearly bullish, and therefore a break above the 122.60-65 could see a rise up to as far as 127, but that's a big call, and I don't have it yet due to the fact is I need confirmation, and let's see what happens into today's price action. Since the break of 143.60, the Canadian dollar has fallen further and now looking towards a target of 139. I do expect from the technical pattern to hold bearish into today's session. Well, all eyes are looking still at 1,648, as a break above there would give further scope to the upside and look towards the region of somewhere around 1,700 and figure 15, maybe even on towards 20 region or to 1,750. We need to break first, but there is no trend and the market still looks a little bit doubtful at this stage on whether or not it can break. But the bears are guarding this level, but for how long? Wrapping up with oil, the market did plummet quite a bit last night, around just over 7%, but the support still holding in there, roughly around $20 a barrel, and above that, 22.5. I do anticipate the market bulls should continue to push to the top side of the range, especially when these technicals are getting quite strong here, so I'm not getting negative at the bottom of the range and wait for the recovery, because I feel the bulls are rumbling in terms of charging at this market and likely to see the price rise. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report. And I hope you have a great start to this new day and weekend.